Hi there, welcome to Kneppy Invest. This will be video number 4 in this particular series, looking at 25 of the best quarter reports that were released on the March quarter financial year 24. The first 3 videos were on SciDev, Bellevue Gold, and ReCloud. This video will be on a company, Acumentis, that I have done a few videos on, standalone videos on in the past. And even though I have done a little bit of research on this company, I don't have any inclinations, have not had zero thought about owning shares in this company. And there are reasons, a few reasons behind that. Now, to really unpack the reasons why I have not even thought about buying shares in this company, let's just talk about what this company does. Property valuers. In fact, this company was created through the merger of 4 Australian property valuation advisory firms, Landmark White, and they actually used to be called Landmark White up until late 2019, Taylor Byrne, MVS National and Saunders and Pitt. Now, right now, Acumentis has grown to over 300 property professionals. And in fact, this is one of the reasons why I have no interest in this company, is because their talent, and when I say talent, I mean how does this company generate revenue? So when you talk about a gold mining company, their talent is the gold. When you talk about technology company, their talent is the technology. Now, you might say like a software company, their talent is the software engineers, but that company can significantly scale by maintaining the amount of software engineers they have on staff. A company like this, where the complete talent is people, the property valuers, for this company to grow, they will have to hire more and more property professionals or people, and people cost money. So you'll see really low margins in these type of companies. And when you do see the companies grow, you just see the employees and the staff costs absolutely grow as the revenue grows. So sometimes you don't see much scale with these sort of companies. So that is one of my, probably the biggest red flag I have in regards to this company. But even when I do have red flags in what a company does, sometimes I will look at the valuation. This company has a market cap of only $15 million, and I think maybe there is some value in the company. Not quite there with Acumentis, even with that market cap of $15 million, but I could get there if the share price flounders or the company grows as the share price goes nowhere. Now, just a few of the financial stats around this company. Fairly low growth. So revenue per share has only grown at 4% over the last 5 years. Profit or earnings relatively flat over that same time period. Gross profit margins only about 29%. But one good thing about the company, they have been operating cash flow and free cash flow positive 7 out of the last 8 half years. So let's have a look at this company's March quarter Appendix 4C. One of the main features you will see around Acumentis is a pretty good receipts. So receipts, $14.2 million for the March quarter, $45.6 million for the year to date, so the first 9 months of the year. So more than likely for the financial year, this company will have receipts or even revenue of about $60 million. And that's fairly high, or seemingly high, but don't forget, this company has over 300 property professionals or valuation gurus, and they cost a pretty penny. For instance, for the first 9 months of the year, they had to spend $30 million. Yeah, $30 million on staff costs. Hence, $45 million of receipts, $30 million just to make their staff happy, their property valuers happy. That's not taking into account administration or leases, or I suppose they have no product manufacturing operating costs and no advertising and marketing. So that is one benefit about this company. But again, a lot of money spent just on their talent. Now, the company is operating cash flow positive, not only for the quarter, but also for the first 9 months of the year to the tune of $2 million. So that is one good thing about this company. This company is self-sustainable, operating cash flow positive, free cash flow positive. Now, one of the questions I do have, even though they have been operating cash flow and free cash flow positive 7 out of the last 8 half years, where has that money gone to? Because they only have $3.2 million of cash. So possibility, there is that possibility that this company has been operating cash flow and free cash flow positive by a very small, minor amount. And I would be interested, if I want to do a little bit more research on this company, is just to see where some of that money has gone. More acquisitions. I don't think this company has a dividend or has done share buybacks. And I don't see them doing any sort of research and development. So that would be one question I have moving forward if I wanted to further my research on this company. Now, I've already talked about the company hasn't seen significant revenue growth over the past 5 years. And this is the company's receipts history, going back to when the company changed the name from Landmark White to Acumentis in 2019. Now, receipts have grown from 8.7 million to 14.2 million, but the growth has been sort of anemic over the past few years. In fact, if you just look at the last 3 years, taking away the March quarter 2021, receipts have gone exactly nowhere, just going sideways. So 14.5 million to 14.2 million. So that would be concern number one. Where will receipts and revenue start to grow at a good clip? That's one thing I want to see around this company. And there is a potential that will never happen. And as we take a look at Acumentis' 3-year chart, daily chart here, nothing much doing. In fact, when I look at this, I have no interest, or my interest in this company remains very low or quite low. Share price did get to a high of about 19 cents back in late 2021, and then share price took a nosedive when interest rates rose, as many other tech companies. Now, this is not a tech company at all, but it was not highly profitable, and maybe the baby was thrown out with the bathwater in this case, because the share price did grow up from 18 cents all the way down to 5 cents and really has done nothing much since then. Now, a little bit of volume came in the first 3 or 4 months of 2024, but that volume is drying up. So the interest in, as the share price falls away, which you should see, as the share price drops, the volume should fall away. And we have seen that, which telling me the market has very little interest in this company, just like me. And that is all I have for this look at Acumentis' March results for financial year 24. Sure, the company is operating cash flow and free cash flow positive, not only for the quarter, but also for the first 9 months of the financial year. But I just need to see some growth. Just need to see some growth. And I'm not the biggest fan of this type of business model. But even though the market cap is only $15 million, if it did get lower, I could be enticed to maybe buy some shares in this company if I do see some overwhelming value. I'm just not there right now. So if you have any thoughts about this company, maybe if you're a shareholder of this company, I'd love to hear your thoughts. So leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.